Nvidia and Palantir. Both have delivered outstanding performance this year, largely thanks to the rapid growth and adoption of AI. First, let's talk about Nvidia. By now, it's a household name when it comes to advanced computer chips. Its dominance in data center graphics processing units, also known as GPUs, has propelled its stock price to roughly 10 times higher than it was at the start of 2024. These GPUs play a crucial role in powering artificial intelligence applications, giving Nvidia a major competitive advantage in the tech industry. Next up is Palantir. This company has become the leading software player in the AI sphere, thanks to its expertise in deep data mining, which it refers to as data fusion. Palantir's capabilities gained significant momentum after launching its artificial intelligence platform last year. This move catapulted the company into the spotlight and contributed to its remarkable stock performance. Both stocks have enjoyed massive gains so far, which raises the question, which one is the better buy right now? Each company has its unique strengths and competitive edges. Nvidia's hardware solutions are essential for training and running advanced AI models, while Palantir's software platform provides indispensable insights and analytics for businesses and governments worldwide. In the rest of this video, we'll compare these two powerhouses in detail, discussing their growth potential, risk factors, and what you need to know before making an investment decision. Stick around as we dive deeper into the exciting world of AI-driven innovation. Let's get started. Before we begin, this video is not an investment advice and must do your own diligence. However, with my experience investing for years, the content from this video has a solid research foundation. Check our Patreon on the description below for an inside members-only access on what are the best buys now. We will also update you on what to sell for gains or to avoid losses. Subscribe to our channel so you will never miss out. Nvidia stands at the forefront of AI, driven by its revolutionary CUDA software library, which gives it a significant edge in chip design. With a staggering 62% GAAP operating margin, Nvidia's financial success speaks volumes about its innovation culture. However, reliance on foundries like Taiwan's Semiconductor manufacturing company poses risks, as the semiconductor industry is notorious for price swings and inventory fluctuations. Nvidia has emerged as the top chip design company, largely because of its strength in artificial intelligence. One key factor is its CUDA software library, which gives the company a strong competitive edge. The company has fostered a culture of innovation and appears ready to stay ahead of rivals in AI chip design. However, its reliance on foundries, such as Taiwan's Semiconductor manufacturing company, can leave it exposed to industry cycles. Semiconductors are known for price volatility and swift changes in inventory levels. This means Nvidia's biggest challenge may come from shifts in industry trends rather than direct competition. Palantir started by working with U.S. intelligence agencies after September 11th, connecting critical data points to uncover potential threats. Over time, it expanded its offerings to cover a range of use cases, including cryptocurrency, data protection, and combating money laundering. The company's main software platforms, Gotham, Foundry, Apollo, and the artificial intelligence platform, AIP, each serve different purposes. Gotham and Foundry organize massive amounts of information into usable datasets. Apollo enables clients to operate their software in almost any environment. AIP then applies machine learning to accelerate insights from Gotham and Foundry. Palantir relies on a small number of clients with large, complex contracts, which sets it apart from many other software providers. Instead of competing heavily with outside companies, it often contends with the internal software development efforts of its own customers. Like Nvidia, Palantir could be affected by a potential market downturn, yet its specialized niche and robust competitive position suggest it may weather industry-wide changes more effectively. First up, Nvidia reported a massive 94% jump in revenue, hitting $35.1 billion in the third quarter. Their net income also climbed to $19.3 billion, marking a 109% increase from the previous year. Meanwhile, Palantir chalked up a solid 30% boost in revenue, reaching $726 million. That growth was driven by strong performance in the U.S. market and their commercial segment. On top of that, they saw net income surge by 103% to $149.3 million, thanks to rapidly expanding margins. Both companies are clearly delivering impressive results, but it's pretty clear that one is outpacing the other in terms of growth. Let me know your thoughts in the comments below. This year, Palantir has experienced explosive growth, driven in large part by multiple expansions. Because of that, the stock is now trading at a very high valuation. Specifically, Palantir holds a price-to-sales ratio of 75 and a price-to-earnings ratio of 411 based on GAAP earnings. Meanwhile, Nvidia seems more moderate by comparison. Right now, Nvidia's price-to-sales ratio sits at 31, while its price-to-earnings ratio is 55. Both companies show a lot of promise, especially if the demand for artificial intelligence keeps rising. However, when you weigh all the factors, Nvidia seems to stand out as the stronger choice. Let's start with Palantir. There's no denying this company has proven its worth to customers and carved out a solid competitive edge. Yet the high valuation poses a significant risk. If expectations aren't met, the stock could easily take a nosedive. On the other hand, Nvidia appears ready for similar growth, but carries less overall risk. In other words, while both companies might benefit from an AI boom, Nvidia's balance of potential and stability puts it in a better position for many investors. Give us a like if you like our video, subscribe, and ring the bell to never miss out. Check our Patreon for an inside look on what are the best buy and sell stocks every week.